traders, how's it going? Nick from Vant Trading here. It is Sunday, May 8th. I'm a little late putting this video out. I'm going to chalk it up to Mother's Day. Spent all day, pleasing the wife and my mother and everyone else that, would have been applicable for this week, but it's worth it. Everyone make sure you take care of the important people in your lives or they may take away your trading accounts. So I'm getting this video out now because I want people to be prepared. If there was anyone out there who hadn't prepared yet for this week's trading, it's going to be a big one. And I want to make sure that I at least cover some of the topics, and we can talk now about where the futures are trading since it's past 6 p.m. Eastern for the market. So let's just take a look at the market here because we did a little test down here. We fought on Friday. We chopped, we battled, we did a little doji, which makes, in my opinion, what happens next all the more important. The market has now hit its best losing streak, its longest losing streak rather, in a weekly sense in the last 10 years. So we closed red. That has now been 5 straight red weeks in the market. So that does mean, sure, we could be a little oversold. We could get a bounce. I'm not banking on it. I'm not going to be the first to buy. We are at critical support, so I will give you that. And if we are going to see a bounce and a short squeeze like this, I don't think it'll be to the same degree. It absolutely could be, but we just need to be careful and be very cognizant of our risk management. So it's been a very tumultuous week. We had the Fed last week. We've talked about that to death. We then subsequently sold back off to the lows. That tells you something. There is demand destruction out there. Bonds continue to make new lows. This is a nasty market, and it's going to get nastier. So just to put that in perspective. Now that, on the small microcosm of what's coming this week, we'll see if, we put up a little more fight. I saw some people categorizing this market right now as paralysis rather than panic. I would largely agree. We aren't seeing true panic yet. We aren't seeing them flooding for the exits. It is happening. There is mass selling, mass liquidation, but it's a little more controlled at times, and you're seeing pauses in here. But we are not pricing in a recession yet. And that recession, whether it is a year out or 5 months out, depending on what bank and analyst you look at, we could definitely be lower. And I expect us to go lower this year. But for this week, we'll have to see. Let's talk about what headlines we got over the weekend, what's going on. So we finished Friday with some pretty impactful numbers. Employment did beat on the report, but the participation rate imploded. So I still firmly believe the jobs market is, at least at the moment, irrevocably broken. Maybe we get a recession, maybe that resets things, but the jobs market is still seeing some serious issues, in my opinion, with the massive amounts of job openings relative to unemployed workers, the participation rate absolutely imploding. There's something weird going on. We're still waiting for that to continue to show something. The jobless claims and the Challenger Job Cut Index both showed movements in the wrong direction. So that's something that we need to continue to monitor. If the job market does start to show cracks, that's an issue. That's when the market could start to price in, a recession. Now, there is a big event tomorrow. What is the big event? Russian Victory Day. The reason I say that is because Russia Victory Day is going to be taken probably pretty seriously there. In fact, I saw some U.S. embassies advising Americans abroad to not travel out on that day. I'm not saying that there's going to be attacks, but there could be some proclamations from Putin. There could be some escalations. We could see something declared on NATO. So there's going to be a lot of uncertainty as to what we're going to hear tomorrow from that. So be very careful, manage your positions in your risk, and make sure you're not susceptible as much as possible to any potential headlines through after hours trading. So that's something that we need to be ready for. Russian Victory Day tomorrow could be a big event, could be nothing. We need to be prepared. We also got consumer credit numbers on Friday, and they were very, very scary. So Friday, or the last consumer credit numbers we got were from February. February's consumer credit numbers were double what we expected. They were over double the $18 billion in consumer credit numbers that we expected. This month was even higher. This was March's numbers. Now it is the highest number ever on record, at least since we've started measuring consumer credit. March we were expecting 25 billion in consumer credit. We got over 52 billion in consumer credit. Americans are swiping those cards, and at some point, with raising rates, with APRs going up, that's going to have to stop. So until that number stops climbing and until retail sales start dropping and we see the consumer start to buckle, that's when we need to really be worrying. Non-revolving credit raised 21.1 billion. Some people were like, yeah, it wasn't as much. Still the sixth biggest number on record. And then the credit card number in terms of debt, it exploded. It over doubled from February's number, $31.4 billion. That is a big deal. That is something we need to watch. American savings, excess savings, long gone. We've spent the stimulus money. what lies on the horizon, this is definitely one of those numbers to watch. It's usually not a number that we watch that closely, but that told us something. And now we need to be very cognizant of even the B tier economic reports, because pictures are going to be shown, and we're going to have to watch that very closely. We had a lot of Fed governors talking on Friday. Most of them are idiots. Kashkari saying that they're probably not going to be able to get as many rate hikes in. I believe that they're not going to get 11 rate hikes in like people are hoping. Let's be honest. But that's another thing that we have to listen for, is when the Fed governors talk. That is something we need to continue to watch. But that's the majority of the main headlines. Other than that, it's just kind of a lot of rhetoric, a lot of back and forth, people talking about the Supreme Court stuff that's not going to necessarily alter the market right now. The food crisis is something that we need to continue to monitor for the longer term picture. But for this week, what we have lying ahead of us is going to be a relatively quiet week in terms of economic events. Monday, we get wholesale inventories. Tuesday's the 3-year note auction. Relatively quiet first 2 days. Maybe we get a little more chop. Who knows? Wednesday, CPI. That could be a bigger deal. We want to see if inflation is topping like analysts are predicting. The 10-year note auction, that's going to be a big deal. You're seeing what's happening in bonds and treasuries. Treasury statement, petroleum status reports, yada, yada, yada. Thursday, you get PPI, jobless claims, nat gas, and the 30-year note auction, as well as the Fed balance sheet. Definitely want to watch all of that as we go. And then Friday, you get import-export prices and consumer sentiment. I think we know where some of those numbers are going to be going. So a lot of some B-level events coming up ahead of us. And in terms of Fed governor speaking, that's one thing that we'll just have to keep an eye on here. I want to pull up the Fed's calendar real quick just to see if we have anything necessarily planned. Doesn't look like it. Does not mean that Fed governors are not going to be talking. So check that every day, because now they're back out yapping and flapping their gums again. And we see that the Fed uses that as policy to alter the market. So I fully expect the market to continue to drive down in the short, even in the short term. But we could get a squeeze. Keep that in mind. Looking at the SPY, let's actually look at these technicals. Let's move on here, because as this video is going out late, I don't want to take too long. We definitely need to be watching levels that we put in yesterday, because right now, at the time before tomorrow, we are trading back at the lows. The futures are trading lower. So we need to be careful here. It feels like we're about to roll over into Monday. We could wake up Monday and the market could be a lot lower, and then we need to figure out what's going to happen with a gap, with movements, what we're seeing. So just be careful. Definitely watch the low from Friday, watch the low from back here last Monday, and watch some of those levels, because those are going to be your last levels of support and your kind of last line of defense, if you will, in the market before, let me see here. There we go. Before, if we break these levels, you got a little room below it. You got $400 a share, maybe. If I go to a weekly here, you can see you got maybe $400-ish a share. But at that point, I think we're destined to go back to the weekly 200-day SMA, in my opinion, at least. So I'm not saying we're going to go straight there. There's going to be a lot of movement in between, but we're at the lows here. We're entering the week at the lows with a lot of uncertainty. Tech made new lows. They finished at the lows. They're sitting lower with the future, so it's a dangerous time for tech. Got some stacked levels below us. You do have this support around here, so maybe watch multiple markets, see if any of them give you that sooner support, that more fuller picture. I'm gonna watch around that 300, that 299 in the Qs. You got a little bit more room. We've already taken out 2021's movement pretty much, so at that point, we've already retraced that, but we still have some room below us. IWM, meanwhile, is the IWM. It's the bastard child. I talk about this. We're already almost back to pre-COVID highs. We're almost back to the 200-day. Small caps are getting obliterated. It's no surprise there. I don't expect that to change anytime soon. And the Dow still holding up a little bit here, which is interesting. It's another definitely indicator that we'll need to watch. Another market. Definitely watch kind of this support in here, this kind of volume node, because then if we start dropping that, we've probably got a date with some lower numbers here. It's definitely something that we want to be watching if we can start approaching the $300 level. So it still feels that we're short, but if we hold, if we start moving up, what am I looking at then? Well, at that point, we're still in this giant volume node, so it's still relatively choppy. I'm going to be very hesitant, very cautious. I'm not really going to be holding things overnight. There's no reason to with the risk that we're seeing. Every pop up we're getting, look, pop up, smacked back down. Pop up, smacked back down. Pop up, smacked back down. And the issue is that everyone's looking for this squeeze again. Everyone's looking for it. And as soon as people stop looking for the squeeze, that's when we're going to get it. So just keep that in mind. Be very cognizant of that. Now, talked about the economics, talked about some of the levels. That's what we're seeing. Some of the commodities out there. Oil and gas still sitting up here at highs, still in breakout mode at the moment. A lot could hinge on what we hear tomorrow, Russian Victory Day. Obviously, the EU is still working on that Russian oil embargo. They're working with Hungary right now because they are very dependent on Russian oil, and a Russian oil embargo would crush their economy. So they're trying to get some extra leniency for some countries that need that. Even if they did the Russian oil embargo, it's not happening till the end of the year. But Putin's statements tomorrow could affect oil, so keep that in mind. OPEC, non-event for oil at the moment. Gold, still sitting down here. I like where gold is. I'm personally bullish on gold. The price action is still kind of tilted to the downside. We're still making new lows, but at the moment we're making higher lows rather. So I am interested in gold. The big issue for the market and for gold is right here. The dollar. The dollar is still the safety trade. There's nowhere else you can really go. What are you going to put them in bonds? You're going to put them in high yield bonds? You're going to put them in treasuries? You're going to put them in the market? I mean, where else are you going to have safety right now? Gold, sure, maybe. Right now, though, with the dollar strength, the dollar is a key indicator right now. If the dollar continues to soar at the rate we're seeing, the market's going to continue to get hammered, as is gold. So it's something that we need to watch. If you're not monitoring the US dollar and you're trying to dip buy the market or dip buy gold, you're going to have a bad time. This is something that you need to watch. It is the antithesis of the others in that, this being strong right now is weighing down on others. And it's largely also strong just due to the issues that the other currencies are having. So it's a global market, and the dollar is something that we need to watch. It is at highs, feeling like it wants to break out. Crypto is crypto. It continues to be shit. Someone asked us about it last week. We talked that we think it's shit and it's going to continue to go lower. It's breaking. It's through 35,000. I wish I would have plowed all of my money into short crypto, but I'm not that ballsy. This thing is still breaking lower. Watch these lows. At this point, it feels like we're going to 30,000. It feels like we have much lower to go in crypto. It is not the inflation hedge people tried to claim it was. It's not the inflation hedge. It's not the safety hedge. It's a risk on asset, and the market is not risk on right now. So crypto continues to look weak. I see no reason to want to buy this at the moment. Now, that's your commodities. That's what you're seeing. What are some of the earnings we're going to see this week? What's going on? Look, we've gotten through over 75% of the earnings at this point. It's the smaller companies. There's still going to be a lot of very good short-term trading. And we still have plenty of companies reporting every week, but some of the bigger ones. Monday, you get BNTX, which is the Pfizer partnership on the COVID vaccine. I don't think we get anything there. You get Tyson, which I'm very curious about. We are seeing a massive, massive amount of the bird flu going through the U.S. Prices. Tyson's already been very transparent about they're just hiking prices straight to the consumer. That cost pass through the consumer has been prevalent at Tyson. So very curious about their guidance and see what's going on there. It's going to affect likely the food industry in terms of performance based on what they say. You get a lot of energy companies this week: Duke Energy, Exelon, a lot of different varying areas of the energy sector. Going to be very curious to see what we get there. So you will get some plays there. Monday after the close, you get Triple D, which, who cares? AMC, which who cares? BLNK, which again, EVs just not in play right now, but there could be short-term trading. Lemonade, which was a COVID winner, insurance COVID winner, not really in anymore. Upstart, which is interesting, but it's still sitting at lows here. SPG, which is a massive mall REIT, one of the biggest ones. This is in a bit of a downtrend, and REITs in general have been getting very, very hit lately. I don't see that ending anytime soon. No Vavax, which has already dropped, Plug, so on. Tuesday, you have Cron again. Who cares? Fox, which it's in a bit of a free fall here. The whole sector is in terms of telecom, so that could be interesting. Planet Fitness, which was a reopening play. Peloton, which is going down, down, down. Norwegian Cruise Line could be interesting. We've seen a little bit of fluttering in the reopening sector here and there. Now they're getting absolutely smacked. Look at Expedia, dropping, Airbnb dropping. So I'm going to be curious about Norwegian Cruise Line, what's going on there. Tuesday after the close, you get some weed companies. You get EA, which is kind of in a bit of a drop here, pretty aggressively as well. Unity, which is making new lows. Win, if you want to look at some gambling plays. RKT, Rocket Mortgage, which I think just laid off a bunch of people. Roblox reports this thing's continuing to go. I think this has been a fantastic short for a lot of people. Oxy reports. Oxy, Tuesday after the close, is going to be interesting because Warren Buffett keeps buying this. He keeps buying it up at highs. Let's see if this is going to pay off for him in the short term. Definitely a market winner right now. Wednesday, you get Fiverr, which could be interesting. It's kind of, like a Dollar Tree, kind of. Krispy Kreme, I don't know. I don't really trade Krispy Kreme right now. Wendy's for a little food play. Wednesday after the close, you get Beyond Meat, which is just, we joke about Beyond Meat constantly. Rivian. Disney reports Wednesday after the close. That's going to be very interesting to watch based on what's happened with Netflix lately since their earnings. They continue to tumble with what's happening in Florida. I think a lot of eyes are going to be on Disney. They just had a massive, massive release in the movie Doctor Strange and the Multiverse of Madness. I'm expecting good numbers from that. But we'll see what Disney reports Wednesday after the close. Thursday morning, you get a couple other plays. USFD, the U.S. Food Holding Company, UTZ. Veru, Six Flags, cyber. Cyber could be interesting. The cybersecurity and sector, the kind of cyberspace in general has been very interesting. And just the aggressiveness of the selling that we've seen here. It's very, very interesting. It's been a sector that was outperforming, and then suddenly liquidation started hitting. Thursday after the close, you get Mike's favorite company, Affirm, and I say that sarcastically. For those who don't know, ACB, crap weed company, LegalZoom, not too much. We're in the tail end, the trash end of earnings, but there is still opportunity. And other than that, what are the other stocks I'm playing? I'm going to be playing the same stuff we talk about every single day: Tesla, Apple, the market generals who are below the 200-day. I'll trade the commodity plays as well: lithium, uranium, wheat, those guys. I'll continue to trade anything that's in play. Zillow could be interesting after their earnings. I think there's going to be good second day plays on earnings. Look at Devon Energy after theirs. DVA had a massive dip buy after their earnings miss. I showed you Airbnb and Expedia. Net could be interesting. This BLCO just IPO'd last week. This could be an interesting one. It's the massive eyewear company. So you do have some stuff out there. Pfizer's interesting in an interesting level. I'm looking for $1.25 tree to drop in AbbVie. Play a little catch up on the downside. There's a lot of opportunity. You can play the cyber or the semi space. There's a lot of stuff right now. If you're a short-term trader, you want to play momentum. We just got to set our levels, watch ourselves, manage our risk, and trade our plan. So I'm going to end it here. I just want to give you a little outlook for the week going forward. It's out a little late, so again, I apologize, but I'll see you again tomorrow, Monday through Friday, for the morning market analysis, and then Monday through Friday at 1 p.m. Eastern for the Vant live trading podcast. I appreciate you all for tuning in. I hope you had a fantastic weekend, and as always, safe trading.